10-year note yields end out the week moving slightly lower, closing out at 407, down about 2 basis points from Thursday's settle. Now, on the week, we saw yields open up around 410, move down to 4%, and then rally back up to 411 before closing out the week at 407. So while we did close slightly lower on the week, it was a full week and trading a full range. Again, seeing about an 11 basis point range and settling at the midpoint of that range. Despite the fact that we've seen a shift in rate cut expectations, recall those rate cut expectations a few weeks ago, we're talking about maybe 50 basis points at November and December, and then it got cut back, and now we're looking at a 25 basis point cut at November and about 80% chance of a 25% cut at December. So those rate cut odds have diminished as we've seen stronger economic data, giving the Fed a little bit more perceived flexibility as to how they're going to approach these meetings and potential rate cuts. But again, seeing 10-year note yields see about 11 basis point range, but closing lower on the day and lower on the week at 407. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will notice that as yields have been rising generally, we've seen volatility moving higher. And even though we saw yields moving slightly lower on the week, volatility has remained elevated as we do see those still elevated geopolitical risks, economic and political risks all still reigning. Lastly, let's talk about what we have next week. Next week is a quieter calendar week. We do have durable goods and we get Beige Book. We'll also get a 20-year and a 5-year TIPS auction, as well as more Fed speakers. As we get towards the end of October, we start to see data points picking up. So after a busy week, seeing yields move from 410 back to 4%, then back up to 410, we close out the week at 407 ahead of next week's durable goods, bond auctions, and more Fed speakers.